fair value gaps are amazing, but in some cases, when trying to read a lot of fair value gaps at the same time, it can be quite overwhelming. Now to fix this, we can focus on 2-candle rejection. I and others got funded using 2-candle rejection. Now with 2-candle rejection, we know exactly if the next candle should continue higher or lower, but it won't work if we don't understand the PD rays. PD rays are at the foundation of everything that we do because we're always moving towards and from PD rays. Now for this video, we are going to focus on fair value gaps and swing points. So swing highs and swing lows as our PD rays. Now, if we are expecting higher prices, a bullish trend in the market, then premium arrays will be disrespected and discount arrays will be respected. And then from those discount arrays in a bullish trend, it's important to understand that the objective of price action is to create a new fair value gap as soon as possible. So right here, we said it all starts with those PD rays. We have this fair value gap that we can continue higher from. Now, this fair value gap is on the daily time frame. A usual reaction, or what people do, is go into the lower time frame right here. Let's take the 1 hour as example, to then look at fair value gaps to continue higher from right here on the 1 hour. If you take these fair value gaps right here and you go up a time frame again, so we go back to the daily time frame, then what do we see? Those fair value gaps on the 1 hour time frame, they turn into one singular candle when you go up in time frames. Now, this is what we know as candle signs, how one candle equals fair value gaps and fair value gaps equal also one candle. But within candle signs, we can know how long it should take before we continue higher from this bullish fair value gap, for example, and what the next candles at this moment in time should do. Now, this 2-candle rejection understanding can be useful then in understanding our bias, in understanding our entry, our risk management, whatever you can think of. So we understand 2-candle rejection is based on candle signs, and candle signs is based on fair value gaps. So 2-candle rejection and fair value gaps are essentially the same thing. It's just dependent on what time frame you are looking at. So right here from the daily fair value gap, we are looking at one singular daily candle. But what we just did on the lower time frame on the 1 hour, we are looking at fair value gaps. So we are looking at the same confirmation just on different time frames. So with 2-candle rejection, there is 3 things that we can do. Either the first candle rejects like we have right here. We have this bullish fair value gap on the daily time frame. Then on the same time frame right here, this first candle trading back into that daily bullish fair value gap also creates a rejection. In other words, it is respecting this discount array right there. Then what can we expect from the next few candles? Well, what did we mention? What is the objective of price when we retrace back into that discount array? To create a new fair value gap as soon as possible. So right here, the first candle is a rejection. The second candle can follow through and create an expansion phase candle to create a new bullish fair value gap as fast as possible, like we see right there. This means that after understanding this one singular candle, we right here can look at those premium arrays towards the left as our next targets right there. The second option that we have in 2-candle rejection is if the first candle does not reject, what happens? If the first candle right here does not reject, then the second candle is very likely to sweep in a bullish scenario the previous candle low right there to then create the rejection to potentially continue higher. Then what should happen afterwards right here? Well, the third candle right there should create an expansion phase candle to do what? To create that new fair value gap as soon as possible. But then what is the third option? The third option is when neither the first candle nor the second candle rejects. Now, this also tells us arguably even more valuable information. So right here, we ran into this premium array right there on USD/CHF, that swing high. Now we can expect a retracement right here back into this fair value gap. When we create that retracement back into that fair value gap, we see the first candle is not a rejection. It's creating this potential bearish fair value gap right there. And what do we see with the next candle? The next candle right here actually creates this bearish fair value gap. So at that moment in time, we have a bullish fair value gap that we are not necessarily respecting. Then we have a bearish fair value gap. So can we continue lower from this bearish fair value gap? Well, what do we see here? We sting into this bearish fair value gap right there. And we could argue this is quite a big rejection right there. So the next candle, what can it do? It can continue lower right there if it wants to keep on respecting this bearish fair value gap. And what do we see instead? We have a new up candle right there closing above this high. So also not sweeping the previous candle high to then continue lower. So what does this mean? That means we are not respecting this bearish fair value gap anymore. Instead, we are disrespecting it. And when we are disrespecting this bearish fair value gap, that means that we can now look at higher prices to target this daily swing high right there. And by going down the time frame, what do we see right here? We see that we create this bullish 4-hour fair value gap right there. We have a sting into that. First candle rejects right there. The second candle can follow through towards this target right there that we had established on the daily. Now, there's one last thing that is extremely important to understand. This is what we call in the MMT an ugly 2-candle rejection. So we have this 4-hour fair value gap right there. The first candle is somewhat of a rejection, and the second candle still sweeps this previous candle high. The third candle, what we see right there, is not an expansion phase candle lower. Instead, it creates this long wick at the bottom. When it takes a lot of candles right there to continue lower, that means it's an ugly 2-candle rejection. And sooner or later, when you go into the lower time frame as well, you'll see right here that this then turns into what we know as a consolidation right there. Good price action means we will have a good 2-candle rejection. All right, perfect. Thank you.